everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent. Today we will be doing a stock screening of a stock that I saw today pass the 4% yield. We're going to be talking about whether it's undervalued, overvalued, and then go into its 1 year, 5 year growth or decline. Take a look at its payout ratio, take a look at its dividend history, take a look at its let's see here, what its forecast is, and then take a look at its support and just overall stock, whether it would be considered a buy, hold, or sell in my opinion. So taking a look at this, the ticker symbol that we're going to be looking up today is IBM, International Business Machines. Now you can see that they have done pretty well after the 2K crash. Anybody that would have sold on the crash would have definitely lost quite a bit, but if you would have held IBM after the 2000 crash, there are some technology stocks out there that didn't recover after the crash. This one, on the other hand, did do a recovery. So it's had a recovery in 2000 crash and had a big crash in 2010, but you can see it recovered quite well and then has done really well since the crash of 08. There was a high point, what looks like in 2016, and then fell back down. 2013 was its highest point, where its yield was in the 1% range. Right now its yield is 3.93. That's a little bit incorrect. As of close, it was 4.13. So that's when I looked at it. It popped up as a buy on my alert, and because it broke the 4% yield. So that's why we're taking a look at it today. So looking at the 1 year pattern, it's had overvalued, undervalued, overvalued, or undervalued, overvalued, and it's been doing this flip-flop. So if we look at the trend, it could continue to do it. It has giant fall, or it has a small fall, then, or let's see here, is a nice increase, then a bigger fall, then a nice increase, and then it had a huge increase, and then it had a big fall. So the next one could go even higher, or it could continue to fall a little bit lower. But right now, looking at the chart, it is currently undervalued for its current year potential. We can see that its estimated, its middle point for the year is 3.5. It's sitting at 4% yield, so 0.5% over the average for the year. The only time you would have been able to buy it somewhat higher is back in 2016, around January timeframe. It was at a 4.29% yield. So right now you can get it at a 4% yield. That's one of the highest points in probably the last 10 years. Looking at the the 10-year charts, this is the highest point. This is the second highest point. 2016 January would have been the highest point, but you can get IBM, which is the a blue chip company that's, I think it's in the Dow, or yeah, I believe it's in the Dow, for a great price right now. Now it could come back up, but that's that's up to you guys if you think its future looks good. To me, it looks a bit risky. You can see that these high swings, it's on a downwards trend. It looks like it broke its support right here. Looks like it had a support bar probably in the 140s, but it fell below that. So it's currently broke below the support. So right now it does look undervalued. Now let's take a look at a little bit of its history here. Taking a look at its 1 year, it's actually down. It looks like about 11%, 10%. Yep, it down 11.2%. 5 year, oh, that looks even worse. Probably around 30. Had 27% downward. So this stock would not beat the S&P 500. It actually has a negative of 27%. So 27 by 5 is a little over 5, like 5.15%, and you wouldn't have got that back even with the payout ratio. You would not have broken even on that stock. So it could continue on a downwards trend right now. It's really hard to tell. I would need to really read up on what they are. I would need to listen on their next earnings call, listen to their past earnings call, see what kind of stuff they have going for their future, and then read about them. That's what I would do if I was looking at them as an investment after I screen them. Right now they are looking undervalued, but their 1 year, 5 year growth do not look that great. That's one of my rules, is I like to have at least an average of about 10% on an upwards trend. But let's go ahead and continue on here. So my other rule is I like to have a payout ratio of under 60. So that does good on that rule. It has a 4.13% yield, so that's great. Dividend growth. They've been paying out dividends and increasing it for the past 17 years. They've actually increased it 17 years. They've been paying out previous, but you saw that in the 2000 they cut it back quite a bit. So if we look at the dividend history here, they didn't have a stock split. Oh, they did have a stock split. That could be why they decreased their shares. So yeah, in reality, they have never cut their dividend. 17 years is what it says that their dividend growth is, but they did a stock split here. And normally what happens during a stock split is they will split up their quarterly, whatever they paid quarterly, 24 cents, they'll cut it in half because you have double the shares, and now you're going to get basically double the shares. If they don't cut that dividend in half, they're basically paying you 24 cents for double of what they were originally paying you. So I know some stocks out there, they don't cut their dividend when they split their stock. I think Apple was one of them. They continue to pay out the dividend per quarter even when they cut the stock. So even if they so this is incorrect here. They've actually had dividend growth for longer than 17 years. Their ex-dividend date is next Tuesday, so you have to buy and hold the stock on Monday through Tuesday to be eligible for the payout on the September 9th. Now let's go ahead and look at CNN Money. This is somewhere else I like to look at for their charts. Now this gives you, let's see here, their forecast. So IBM has 23 analysts, and they offering a 12-month price forecast for IBM. So we can take a look here that the median is $160. So that's only 10%. So their median outlook is $160, and that's a 10.2% growth. Now that would actually be good if they did that. That would be my number 5 rule of having an upwards trend of 10%. But you can see that their 1-year, 5-year has not met that rule. They may or may not commit to that, that future. This is all forecasted. So a high of 200, that would be a 37% gain, or a low of 110, which would be a negative 24% gain. So I don't really consider the high mark, especially IBM. They have a lot of competition out there now. IBM's a very old business. They haven't had a lot of innovation, and they're trying to move into the cloud business. But of course, in there is Microsoft and Amazon, those are two big competitions that have been in the game for quite a while in the cloud. So I could see this probably being more in the median or low range. So much more room to fall than I would to gain in the middle and the low. And of course, they are currently listed at 7 buy, 15 hold. So if you are holding it, continue to hold it, and only 5 sell. So buys do outperform the sells. So this could be still, it's you're catching a knife. They throw a knife in the air, and whether you catch it by the handle and it goes up, or you catch it by the blade and you kind of slice yourself. Let's see here. That's all I'm going to take a look at here. I just like that forecast on the CNN Money. Now let's go take a look at their actual chart here. Now this is the yearly, so we can see here that they had nice growth. In March of 2017, there was an article that came out. Warren Buffett sold off a third of his shares here, and he owned 81 million shares of IBM at the end of 2016. He sold off about a third in the second quarter of 2017. So this second quarter here is when he sold off his shares when it hit $180. I remember reading an article, he sold it in the $180 range, which was right at the tip point. And so 81 divided by 3 is 27,000 or 27 million shares. So 81 minus 27 is, that's like what, 44 million still. So he's still sitting at, pretty, that's actually 50 something, 50. It's in the 50 million range. Still, he has a very big stake in that company still. So now if he does sell off, this stock could tumble a little bit. So not too great that it's being held up, but let's see here. Taking a look at their chart, we can see that they broke their support bar. Their support was looking at $150 range, which was what I saw when I looked here. what was it, their 1 year. I saw that they had a decent support bar right here in the $150 range, but they had actually broke it down to go below into the 145. So that's actually not too great. Now, looks like they have had some recovery down here. They've had up and down, so a lot more green and red down here. They've had a little bit more gain, so they could be bubbling up and might shoot up. So this is, it's for the future. Some of the earnings per share this year is a little bit low. For PE is 12, which is okay. Forward P is 10, so they might price to earnings might be a little bit better, or they just might not be so profitable. It's taking a look at their quick earnings here. We can see that they had good earnings in third quarter 16, better earnings in fourth quarter 16. They had to decrease gigantic. You can see that big loss right here. They're on an upwards trend, so they're actually estimated to on an upwards trend. So this was a big shot in the in the stomach or in the foot, that they went from an estimated $4.88 to a $2.35. So this was probably back in March, where they Warren Buffett saw something, he sold off, and they cut their estimate by almost in half. So that was a big sell-off, and that's probably why they lost a lot of their shareholders here. And now they're kind of on an upwards trend again. So looking at what the estimate looks for the future, if you bought into this and they do meet earnings and beat earnings in the future, this could look pretty good. Looking at their earnings, they're on an upwards trend for their earnings, so that's good. A downwards earnings trend is actually kind of bad, because while they might be meeting their earnings, that means they're on a downwards. They're actually losing out on a lot of their revenue and earnings. We've already talked about their yield, 4.15. We can look at their statistics and take a look at their 1 year, which was 3.5. Trailing 3.86. So that's probably not, that's not their average. It's just their trailing annual yield. Their 5-year average dividend yield is 2.66. So right now you're getting a giant yield for the price. That is really nice. Let's see here. Institutes, 59% held by institutions. Let's take a look at their financials. We already saw that they met earnings. Let's take a look at their total revenue here. Has been going down. Went down there 6 million, and then another 2 million. Yep, and that's take a look at their total net income. Net income is, it's not amazing. 12, 13, 11. I would really need to read into their company to see what sort of, they're doing a lot of research and development. So that's good that they've been increasing their research and development. They're not stale. They're doing some research, they're doing some development, they're trying to come up with new ideas in some way. This could be AI. IBM is trying to step up their game in the AI game and the cloud services. So potentially in their future this could turn around, but of course I would need to read into that a little bit more. Historical data, not so much there. We've already talked about what their analysts are predicting, whether it's a strong buy, hold, underperform, or sell. Very low are saying sell, more are saying hold, which is what we saw in the on the CNN money. Let's see here. This one showed a little bit different. 23 analysts. This one showed 21 analysts. In 2000, okay, so there are more analysts jumping on board to look at this. So that's pretty nice. Average estimate 1374, 1382. So their average estimate is looking to go up. Their low is looking to go a little bit lower in the future. Let's see. Year ago earnings per share 13.59. Their earnings per share current quarter is 328. Next quarter they have a giant earnings per share for the next quarter, and next year is even higher. So IBM, the analysts believe that their earnings per share will increase more next year than it has this year. Their next quarter in 2017 is looking to be more profitable, is what they're expecting. So if, based off what analysts are looking at, right now it's looking like a really good buy. It is currently way undervalued for the price to yield that you're getting. The analysts are looking at it in the future that it is going to be making some of its money back. I could say maybe 10% in the next year. We can come back to this video in a year and take a look whether my estimates are correct. But I think, as a whole, to kind of summarize everything that we've gone through, I think in the next year this IBM will recover. It will no longer be sitting at a 4% yield. It'll be sitting $160. It'll be sitting around a 3.4% yield in a year, and there would have been a gain of about 7 to 10%. We'll say 8% gain in the next year, looking at their estimates plus their dividend yield into that. They could have a total increase of about 10% for the next year. So let me know in the comments below what your estimate is of IBM. Do you think it's a buy? Do you think it's a sell? And of course, I want to thank you all for watching up until this point. If you did like the video, hit the like button. If you think they're also a buy, hit the like video. Remember to leave a comment below whether you think IBM is a buy, a hold, or just don't even bother with IBM. Look at other stocks out there. If you have any questions or just want to say hello, please leave a comment below and I will always reply. Thanks for tuning in, and I will see you next time. Bye.